A couple of smaller companies are among the hidden gems that our strategist Tracy Reinick wants you to know about, so she's going to tell you about them right now.
Yeah.
As a matter of fact, this first one is a small cap company, Hudson Technologies.
Yeah, refrigerants.
Yeah.
And so they make the chemicals that go into various types of refrigeration.
Right. That's a big deal now.
Yeah, it is a big deal, and some of it has to do with the global warming issues because the old refrigerant isn't good, so they're phasing that stuff out. They kind of don't like some of the new refrigerants, some of that's being phased out. So this company, in addition to providing it, actually does the reclamation of it because you have to handle it.
Right.
So they're seeing a lot of business on both ends, basically. And in big news, they just announced that they got a really big contract with the DoD for basically all of the military installations, facilities. I think globally, it's worth about $400 million contract over 5 years. That's the maximum amount. But the company only has a market cap a little over 200 million, so you can see that's a big deal. Estimates are starting to head higher here after a really good quarter, plus the contract. Really huge earnings growth for this year, over 100% earnings growth, and then another almost 70% for next year. So the analysts are real bullish about, you know, where this company is going. Shares were kind of down in the dumps here for almost 2 years, not doing much. $3, you know, it's one of those under $10 stocks. And then we got the big boost because this contract is a big deal. So it's gotten on some people's radar. It's on my radar now, but it's still pretty hidden, only a few analysts watching it. So yeah, and not real cheap here, 22 times or so forward PE, but Zach's number 2 because we got those rising estimates.
It's probably only a matter of time before that whole R22 refrigerant issue starts for this company getting into the consumer market. It's already in parts of the consumer market, in appliances and new automobiles.
Right.
Because people who stockpiled the old are going to run out of it pretty soon.
Right. Yeah. So this company's in a good place for this, and refrigerants happen in more areas than you think. I mean, they'll ship you 30 pounds, and they'll do like a whole rail car. So they're in the whole area.
Okay. John Bean Technologies, JBT, this is a mid-cap company.
Yeah, they're a little bit bigger. They're headquartered here in Chicago, which I didn't realize. There's all these hidden companies out there. But they've been around for forever in some form or another since the late 1800s, actually. They were part of a bigger company that was spun off a couple of years ago, so that's why the name isn't familiar, but some of their products are really familiar. So they do both aviation processing systems, and then they do food processing. So on the aviation side, they actually invented the original pump gun, their old company did, the original pump gun that's used to de-ice the planes since the 1960s. And they also have created the jetway, which we all call it the jetway. They've actually copyrighted that name. I didn't know it could be anything else. It reminds me of like Kleenex. We always just call tissue Kleenex. We always just call the jetway, yeah. So they also have made that since 1959, and then they handle also like baggage processing and all of that, things going on at the airport. And then on the food side, there's a lot of different things that you need to handle food. If you're going to can tomatoes, for instance, or you know, a lot of the fruit and citrus type of things, they have whole systems that they've created over the years to handle on that side.
On the surface, that would kind of seem like an unlikely business combination.
Well, it's because it's so old, and it was part of a bigger conglomerate and then was spun off. There's like a chemical side from back in the day and all of that. And then they spun off these two divisions together. So they must have seen that they're a little more similar than what you and I know.
Than what we see.
Yeah. You can see the estimates here. We have that kind of weird line there for the 2017 estimates, and that's because we didn't have any analyst estimates there, because very few analysts follow this company, again, because it's a hidden gem, not a lot of Wall Street coverage on it. But this is what you want to see. You want to see super nice, steady earnings growth year after year. It's supposed to be another 23% this year and over 20% again next year. This is very consistent. I like this as an investor. Estimates are rising. It's Zach's number 2. I didn't put them up here because I wanted to show the other chart, but you can see this chart again looks very nice, kind of following the market here. I don't think, you know, it's maybe not gotten too ahead of itself, but it's definitely not cheap. It's trading around 29 times. Get a little bit of dividend. These kind of companies usually
just over
pay
0.5%. Right?
Yeah, so you're getting something, but you're definitely buying the growth here. This is a growth play, not a value. You got double-digit growth. You're hopeful that it's going to continue. Analysts like what they see, and it has a big backlog, has some cash on hand. They have done a lot of M&A in the past. So they are looking around for some deals, and the analysts do expect them to, put together some things going in the near-term future here. So we'll just have to wait and see on that.
Okay. Do you own either one?
I do not.
All right. You can check out more stock information of varying sorts on our website, Zacks.com. If you're not there already watching this video, get on over to the homepage and link to it all from there. With Tracy, I'm Terry Ruffalo.